Good morning, friend. Crypto come back. Smart stock strategy. Repairing crypto stacks. Good morning. Below is a detailed explanation of the stock repair covered ratio, focusing on achieving a minimum profit owing Bitcoin or Ethereum that has declined step trading process. Parameter for the stock repair strategy. Stock purchase price $50,000. Original purchase price of 1 BTC. Current price 40,000. Current price of 1 BTC. Long call strike 40,000. At the money. Long call strike price. Short call strike price 45,000. Out of the money. Short call strike price. Long call premium paid for long call. Short call premium 2 calls. Calculated net cost of the options. Net cost equal long call premium 2 into short call premium. Stock price range for plotting. Stock price NP line space $30,000, $60,000 and $100. Pay up calculation. Def stock repair pay up stock price, stock loss, num, long call premium. Short call pay up equal 2 into maximum 0 stock price. Short call strike into norm short calls. 2 stock loss plus long call pay up. Calculate payoffs. Payoff stock repair covered ratio spread strategy for cryptocurrency. Ratio spread is used when a trader holds a long crypto position with a call ratio spread, buying one at the money call and sell out of the money calls. The goal is to break even or achieve a minimum profit if the crypto price rises moderately. Objective for minimum profit. Goal. Additional cost. Profit target. Achieve a least break even or a risk. No additional downside risk beyond the exciting crypto positions $3,000, resulting in a $10,000 unrealized loss. Forecast a moderate price recovery easy to $45,000 within 30 to 90 days. Ensure you have a margin account as selling options require margin. 2. Select the options. Buy one at the money call. Choose a call options with strike price close to the current $40,000 example. Buy 1 BTC call with a $40,000 strike for $2,000 premium. Sell 2 out of the money calls. Sell 2 call options at a higher easy $45,000 to offset the cost of the loss. Execute the trade. Place a buy to open BTO order for 1 BTC call at $40,000 strike price. Place a sell small credit. For monitor the position. Stock BTC price. Monitor market news. Easy regulatory changes. Adoption news that could check implied volatility as it is the outcome. 5th, manage of expedition. If BTC is below $40,000, if BTC is at $45,000, the $40,000 call is its value. $45,000 minus $40,000. The $45,000 calls expire worthless, so you keep the $2,000 premium. The position break even. $45,000 minus $50,000 stock loss plus equals zero loss profit. If BTC is above $45,000, the $40,000 call again value, but the $245,000 calls are exercised campaign. Some profit is limited to the short call strike minus the original purchase price plus any net credit. Close adjust optional. If BTC rises significantly before expiration, consider closing the position early to lock in gains. If BTC continues to fall, you may buy back the short calls at a lower price to reduce the exposure, though this may result in a small loss if the credit is insufficient. Behavior below $40,000 flat loss equal the stock loss minus any net credit. At $45,000 break-even I the long call. Offset the stock losses above $45,000 profit pretense due to the short calls capping gains. Key consideration. Minimum profit. The strategy aims to break even or achieve a small profit, e.g. any net credit received. If BTC reaches the short call strike $45,000, maximum profit is limited to the short call strike minus the original purchase price plus any credit. Risk. No additional downside risk behind the exiting BTC loss. The maximum loss is the original BTC purchase price minus any premium received. Volatility. Implied volatility as a may increase. Option premiums making the trade easier to execute at net zero cost. Platform use regulated platform like CME Group or crypto specific exchanges like Deribit. Compliance with US regulation. Time frame. Choose options with 30 to 90 days to expiration cover. This strategy is effective for recovering losses in a declining capital. Import matplotlib as NP. Parameters for the stock repair strategy. Stock purchase of 1 BTC. Long call strike $40,000 at the money. Long call strike price. Short call strike $45,000 out of the money. Short call strike price. Received per short call. Num shares 1 BTC. Num long call 2 calls. Calculate net cost of the options trade. Net cost premium. Short price range for floating strike price. NP calculation. Diff stock repair payoff stock price. Stock loss on stock shares. Long call payoff maximum zero stock price. Long premium. Total payoff stock losses. Long call payoff plus short call pay out return total payoff. Calculating payoff. Payoffs stock repair payoff price for price in stock prices. Floating. Figure 10. Payoff color blue. Plate Excel. Color block in lifestyle. Line width 0.7. Plot X-line stock purchase price. Color red price 40,000. Flat Agilent short call strike color equal purple. Line style label short call strike 45,000. Plot and title stock repair strategy payoff per duration. Dollar plotting level is legend. Please grid true plotting shows. Please like and comment. Goodbye.